So anyway, let's take a look at what happened today with the markets. And we're going to start with the June bonds. This is a daily chart of the bonds that we're looking at here. And as you can see, this last bar here on the right-hand side, they opened already down a little bit and then went way down on the day, including taking out the lows from early in March and going all the way down to that lower 20 and 2 band for the Keltner. That purple line again is the lower 20 and 2 Keltner channel. And it went right down to that. Now, if you remember from the weekly chart, and let's take a quick look at that. If you remember from the weekly chart, we were mentioning that there was a chance that they could go down to that lower red band, and also that they would come down from being below the lower Keltner on the daily and swinging back up to the middle band, that they would have a good chance of coming back down to test those lows and test the lower bands, which is exactly what they've done. Now we have a very interesting situation because they've done what I expected them to do on the downside. Now, clearly they've broken down out of this last 4 or 5 day pattern, and they broke down out of an inside day. And breakdowns like that often will continue for more than just a day. I mean, we're looking at a 3 to 5 day move on average when something like that sets up. But at the same time, they've broken down exactly to the area that we were looking at in terms of the previous swing low and the lower Keltner channel. So this is what I term breaking down into support. Consequently, when I run my systems and look to see what we want to do for Wednesday, I'll be certainly willing to sell because you'd have to assume the trend is down since they broke down. But I'll also be looking to see if there's any buy signals, because that might very well be a trap. They may have taken out these lows that you can see in the middle of March. They may have taken those and found all of the sell stops that traders had below those lows, orders to sell if that got broke. They may have taken them out and be done. It's called a washout of stops. They may have washed them all out and that's it. There's nobody left to sell. They may go up from here. Now, I don't know that, and that's why, rather than just running in to buy because it could be the case, I'll let my systems now try to get me in. And I want to tell you, I'm not going to go in detail about any of my systems. We could be here all month and I couldn't cover all my systems. I spend hours and hours and hours researching, and believe me, my desk doesn't look anywhere near this clean when I'm on research mode. I've got papers strewn all over the desk and I write on everything. I write on papers, I write on envelopes, anything, and I scribble so bad that I can't read my own writing, and I have to test the same stuff over again because I don't remember what the results were. But I do a bunch of research to come up with these systems, and then I just run them. You know, a situation like this, I'm going to go in, I'm going to run my systems, all my bond systems, and just say, okay, what do you got for tomorrow? But I do my analysis to tell me that it looks like maybe we could have a buy here, even though this is clearly a breakdown. They reacted negatively when the Fed announced, and they had already reacted negatively to a stronger than expected consumer confidence number. So bonds are very interesting to me. This is either the start of a real breakdown here. I mean, if you look at the RSI on the bottom of the screen there, the blue line breaking below the red line, which indicates that the RSI itself has broken below its moving average, that could indicate a complete change of momentum to go along with the breakdown in price. So we may be starting another leg down. Again, just because we're in support, it doesn't mean that they have to go up from here. And that's an interesting point. People are always asking me, oh, support and resistance. Well, if support and resistance always held, the market would continue to shrink down to where there was absolutely no trading going on. They have to break sometimes. And conversely, if support and resistance always broke, there would just be a one-directional market never stopping, and neither of those things happen. So nothing works all the time, but they did break down. I have to think that essentially the trend is down in bonds, but they broke down into support. So Wednesday's very interesting to me. I'll be looking to see if we have signals in either direction and willing to take them regardless of which way they set up. If we go look at the S&P market, looking at the daily chart here, you can see they had quite a large day. They opened lower and took out the previous day's high, going right up to the 3-period moving average of the highs, that red band up there. They got up there and then turned around and came down very hard once the Fed rate hike was announced. And they also have broken down, well, heck, they took out the lows of the last 9 days. And you can count the bars there. They've taken out quite a series of lows, and that's something you have to pay attention to. I mean, that's clearly a market that's broken down hard. However, one of the things my research turns up is this last price bar here is known as an outside bar. It's a bar that goes above the previous day's high and then comes and takes out the previous day's low and closes down there. Those kind of bars in all of the market lore I've ever read are extremely negative. They're supposed to indicate a market that's going down forever from this point. My research indicates that that's not necessarily true. They can indicate a reversal in the market and a breakdown, but if that's the case, they should just go straight down tomorrow and not even fake going up. If they start up at all tomorrow with much of any movement at all to the upside, it's probably at least short term going to go back up and go back at least into the middle of that range that you can see of the last 5 days there. So just cursory looking at the daily chart, I would say, you know, I like the idea of buying if any of the systems set up to buy, even though this is a clear breakdown. So we may go lower. And what we can do is we can look on higher time frame charts, this being the daily. Let's go look at a weekly chart. And we can see what they've done on the weekly. Now, on the weekly basis, they have broken down below that little short-term moving average I use in the middle of the red bands there. They broke down below that little green moving average. That might indicate weakness, but they're so close to it. They haven't broke down very far yet. They could just reverse right back over it again tomorrow. So it's possible that they've found some support in this area and that they would go up tomorrow. It's also possible that the next target, in the terms of the way I think, is that they would break down to that red line that you see there, the next red line, the 3-period moving average of the lows. It's very possible that they want to break down to that line before they find any support. And again, looking at the big picture here on this weekly chart, going back even to October of last year, they still look like they're trending up nicely. And a breakdown to that lower red line, while it might look pretty negative to everybody at the time, that might actually be even a better buying opportunity. But that's what they look like on the weekly, and going back to look at the daily again, because of the outside day, because of the breakdown below the 28-period moving average, but this being the first day they broke down below, and they could just reverse right back up again tomorrow. Again, I'll look at my systems. I think the trend is down. I think they had a clear breakdown. If we have signals to sell, I'd certainly take them. But I wouldn't be afraid to take buy signals either, because there are reasons that they could be going up here. And I think that should be the clearest piece of information I can give you. I don't often go into any day for that matter. I usually don't go in just saying, I just know they're going up today. Sometimes I feel really, really strongly about a market, that they're going up or down or what have you. But mainly it's a matter of analyzing it and looking at the probabilities and trying to weigh which has more weight. Does it look more like they're going up or more like they're going down? And actually in both stocks and bonds today, both the S&P and bonds anyway, you have a circumstance where they've broken down. There's no question that the trend is down in a lot of people's estimation, and they often will continue, as I said, for about 3 to 5 days once they break down like that. But they also have broken down 2 areas and with price patterns that can bring in a low. So I won't be afraid to buy them if signals set up. I'd like to show you one other thing that's kind of coloring my opinion of the S&P here, and that is the NASDAQ. This is a daily chart of the NASDAQ, and as you can see, going back before March, the contract is fairly thinly traded until it becomes the front month, so you really can't analyze anything that happened back there. But just these last couple days to me are very interesting because just like the S&P, we do have an outside day here on the last day. They went substantially higher actually than the S&P did, and then they broke down, but look at how they didn't really break down. I mean, they broke down below the low of the previous bar there, the little inside day, and they did close down there, but they didn't take out the red line even though they got down to it. They didn't close below that. They didn't take out the previous swing low from 3 days ago like the S&P did. So they clearly are not acting as weak, I shouldn't say, I don't want to confuse weekly charts and weekly behavior. They're not acting as weak as the S&P is. And certainly stock market indices don't have to go together. They don't have to agree with each other. But you tend not to get a real major move in either direction in the stock market until you get all of the market indices agreeing. I mean, essentially, I'm talking about the Dow Jones Index, the S&P 500, and the NASDAQ. They are three distinct markets. One can be making new highs while the other's breaking down. Definitely, they don't go lockstep day to day, every day together. But you tend not to get a really strong trending move in either direction unless they basically are in agreement.